Oh, this is the cause stock price is unstable. Shares can be defined as a sign of capital participation of a person or party, business entity, in a company or limited liability company. By including this capital, the party has a claim on the company's income, claims on company assets, and is entitled to attend the General Meeting of Shareholders. External factors. First, macroeconomic fundamental conditions. These factors have a direct impact on the rise and fall of stock prices. For example, rise or fall in interest rates due to the policy of the Federal Reserve. An increase or decrease in the benchmark interest rate of Bank Indonesia and the value of exports and imports, which have a direct impact on the exchange rate of the rupiah against the US dollar. Inflation rate is also included in one of the factors of macroeconomic conditions. High unemployment caused by security factors and political shocks also have direct effect on the rise or fall of the stock prices. Apart from these factors, the relationship between banking interest rates and stock price movement is also very clear. When banking interest rates skyrocket, the price of shares traded on the exchange will tend to fall sharply. This can happen due to several possibilities. First, when banking interest rates rise, many investors shift their investment to banking instruments, such as deposits. With the increase in interest rates, investors can reap more profit. Second, for companies, when banking interest rates rise, they will tend to minimize losses due to increased cost. This happens because most companies have debts to banks. 2. Fluctuations in rupiah exchange rates against foreign currencies. The strength of the rupiah exchange rate against foreign currencies is often the cause of fluctuations in stock prices on the stock exchange. Logically, this makes a lot of sense. The consequences of exchange rate fluctuations can have a positive or negative impact on certain companies, especially those with foreign currency debt burdens. Importing companies or companies that have a foreign currency debt burden will be harmed due to the weakening of the exchange rate, because this will result in an increase in operating costs and will automatically result in a decrease in the price of the shares offered. For example, the weakening of the rupiah exchange rate against the US dollar often weakens stock prices in the Jakarta Composite Index. 3. Government policy. Government policies can affect stock prices even though the policy is still in the discourse stage and has not yet been realized. 4th, panic factor. Certain news can trigger panic in one of the exchange or stocks. This panic will demand investors to release their shares. Back to the law of supply and demand.